Let's see now what's been going on with Zach's Home Run Investor with the editor of that service, Dave Bartosiak, who's right here with me to fill us in. So how many home runs have you hit in the last quarter?
Got a few home runs. Actually, the longest home run in the history of home runs.
Wow.
Yeah, right now, Tal Education Group is up 307% since we bought it, which makes it actually the top performing stock in the history of Zacks, which is great. Granted, we haven't closed it yet, so it could retreat a little bit, but as of right now, it's the top dog. So that's definitely been a great pick, and that is a Chinese after-school tutoring company. Go figure, right?
Yeah, right.
A little bit of a niche there. And then you have A Biomed, which has been in there for a long time. I mean, since Brian Bolin ran the portfolio, I think is when he added that. That's up 191%. Then we have Wix.com, which is kind of a DIY website hosting platform, website publishing platform. That's up 107%. And then Micron, which we added not too long ago, is up 94%. So there have been some pretty good ones that have performed very well over the course of the last quarter. But then the recent additions, we have Tactile Systems, TCMD, which is up 36% just in the last couple of months. And then Control4, which is a home automation company. So, you know, the lights turn on and everything, the cool stuff. The gadgetry, that's up 24%. So it's been kind of gadget focused, tech focused, but that's home run, right?
So what does that say about what you did right?
So we got into a couple of spaces, especially so China was a good place to be, not just with Tal Education Group, but we also had Momo in there, which is a social gaming site now, or online social gaming in China. That was a little bit of a head scratcher though, because everything was going great there, and then they had an earnings report, and then the stock was off 25%, and that was actually kind of a concern of mine, obviously, seeing the stock come down so much on earnings, but. You know, if you liked it at 100, you got to love it at 75, right? So nothing fundamentally changed with that company. We're just kind of sticking with it. So I think it's being brave enough to go, you know, where no man wants to go, and it's throwing your money at China, despite some of the risk in there. So that definitely helped us, and then some of the growthier tech space too.
What went wrong in the last quarter? So
what went wrong was trying to buy the dip on some of these stocks, right? So getting into areas where of the semiconductors, that was a big thing. So semiconductors did very well. All of a sudden, they hit a wall. They retreated pretty significantly. So I figured, okay, well, it's on sale. I'm going to go ahead and peck at this a little bit. And we got punished by doing that because they never really started to take off like we wanted them to take off. There was also a lot of cloud services companies that we added that had huge growth numbers, continue to have huge revenue growth numbers, but for whatever reason, the market's just not there right now. You know, the market didn't become risk off in the sense of money going from stocks into bonds, but it did start to experience sector rotation where things got a little bit more conservative, and they were shying away from tech as the NASDAQ started to run out of gas and retreat. And basically, essentially what happened is the NASDAQ went from being, you know, something that nobody could touch to coming back down to life with the mere mortals. And there was some growing pains as that happened.
So where is the market headed, technically speaking, going into the end of the year here?
So right now we're getting a little bit choppy here with not just the S&P 500, but you also look to the NASDAQ and even on the Russell, where we've come down underneath the 50-day and in some cases the 200-day moving average in terms of the Russell. And the slope of these moving averages is starting to get horizontal. So what that tells me is that we're getting range bound in this market, which isn't necessarily a bad thing, right? We're just kind of getting our breaths a little bit after this huge run up, trying to figure out what's going to happen next, because there is some uncertainty on Capitol Hill, as well as with the Fed, that the market kind of has to work out before it really takes its next direction.
Do you see a particular support number for the market?
I do. So on the S&P 500, you're looking, I mean, the easy way to do it, right, is just say 2,400. There's some more, you know, key levels in there. So you have kind of the June or the July lows. I think they're June lows. I think it's 2,407, so somewhere in there, in that range. That's definitely a key level. And then the 50-day kind of changes, you know, based on the day. I think we're going to see that this pattern where the market's just above the 50-day, below the 50-day, above the 50. I think we're going to chop around here a little bit. So definitely 2,400 is the level to keep your eye on to the downside there on the S&P.
And so based on that, how is this service positioned to finish out the rest of 2017?
So the good news is that we've obviously have a small cap bias here in Home Run. So, and I think I'm going to continue to divest away from your traditional tech names in terms of, the semiconductors and things like that, electronics, and start to move more towards the biotech space, because we have a very accommodating Trump FDA, I believe, which is going to continue to allow for experimental drugs to, get through the pipeline and things like that. So you're going to see some more exposure that way. And we used to be very heavily that way. That's why we have the, A biomeds of the world that are in here. And if you look at some of the past big winners, they've been in the biotech space. We just started to shy away from that a little bit as the electronics part of the business really got hot. So now that that's cooled off again, you're going to see more exposure into these biotechs, which is perfect, because, that's what we're here for. We're trying to swing for the fences and hit a home run. And what's more appropriate than, an experimental drug?
All right. Thanks for the update. Don't forget, in between these video updates, you still have Dave's commentary to rely on. So keep an eye on those commentaries that come direct to your inbox between now and the end of the year for any changes in Dave's thinking with regard to the market especially, but also the holdings in the portfolio. With Dave, I'm Terry Ruffalo.